Hi and good afternoon. It's Jed Wonderly with Noble Home Loans, and I'm here with the Mortgage Market Minute, and just wanted to give you some kind of breaking news, if you will, although it broke an hour or two ago, maybe a little longer than that. The Fed did raise rates just as expected. The Fed funds rate is now up to 2.25%. But the big news is they did a couple things. First of all, well, they did one thing, and then we hear some thoughts and opinions from a bunch of the Fed members, which is kind of the other thing. So one, they moved the word accommodative from their language about future rate increases, which kind of would send the signal that another increase is likely this year, which would be the fourth time, which is kind of what they had talked about earlier. But then more recently they had talked about, well, let's see what some of the, how the tariffs might impact the economy and that kind of thing, and how the rate increases might impact the economy. And, before going forward with a fourth one. So removing that word kind of sends a signal that we should probably expect a fourth rate increase this year. And when polled, 12 out of the 16 Fed members said they expect another rate increase in December of this year. So that said, plan on it. A couple of other very important things to talk about when it comes to interest rates is, the points of economic data that we had recently. And so the first thing I'm going to mention is that consumer confidence, the most recent reading was right around 134, if it wasn't exactly at 134. I can't remember, and I don't feel like looking it up. But this most recent reading of yesterday was expected, or excuse me, 2 days ago, was expected to come in at 131.7. It came in at 138.4. That is absolutely off the charts. It's an amazing reading, and it speaks to probably, the reason why the Fed removed the word accommodative. Additionally, the Richmond Fed Manufacturing Index came in at 29. Versus expectations of 22. So all of these data points are blowing estimates and expectations out of the water. And you would think that the way it has been recently is that as we come out with very strong economic data, the rates go up because mortgage bonds sell off and the price goes down. But if we look at the chart, so yesterday and the day before, it did go down. There was some sell-off. But today, because of the increase in rates, it made stock investors, equity investors, a little nervous, a little skittish. Not so much because of today's rate increase, because that was expected. But what got them was removing the word accommodative and the fact that they're seeing a very good likelihood that there's going to be a fourth increase. Now this could really help, kind of contain the economy, which is good in terms of containing inflation. But we don't want to slow down the economy too much. We want to, make sure it grows at a sustainable pace. That's kind of the key word. But what happened today, because of everything, usually people who aren't very familiar with interest rates think, oh, the Fed raised rates, that means mortgage rates also went up. Well, long term they might, but today there was a very favorable result, and that is that the benchmark bond, the benchmark mortgage bond, the Fannie Mae 4.0, actually went up 23 basis points, which means rates moved down just a little bit. Not a whole lot, maybe roughly about a quarter of a point in fee, which is not quite, which is about half of an eighth of a point. So of an eighth of a percent, I should say. So up 23 basis points. That is the best move since it was up 62 basis points on May 29th. It had been up 19 basis points a couple of times, 18 basis points maybe once in that time. But since May 29th, which is, what's that, June, July, August, almost 4 full months. Almost 4 full months. It is, this is the best day at up 23 basis points. So you can see that there hasn't been huge swings, at least to the good side, over the last 4 months. And certainly, you know, if you look starting on, let's see, September 7th, not quite 3 weeks ago, 1 day shy of 3 weeks ago, that's when we started our really big decline. It's really been about all down days. You know, I mean, we've had a number of little up days, just little teeny respites in between the down days, but nothing significant to speak of. Now, the RSI is right at the oversold threshold. So, you know, it came up to that today with the nice up day that we had in the mortgage bond market. And, you know, short of any other, you know, bad economic data, you know, I hope you took the opportunity to lock today. Maybe we get a little follow through tomorrow, who knows? If we do, I highly recommend locking. Even if we don't, I recommend locking to protect yourself from the downside. Because certainly, as long as we keep getting good economic data, you can expect the Fed funds rate to continue to go up, not just in December, but, you know, maybe have a few more increases next year. You can certainly expect that long-term interest rates like the 10-year note, as well as the mortgage bonds, will also go up. And so protect yourself from the downside. If we get significant improvement, you can float down, assuming the lender you're working with has that ability. We do. I'd love to work with you. You can call me at 702-812-1214 or 801-893-1737. But if, whether or not they have the ability to float down, it's more likely that we're going to continue to see rates going up, at least for the foreseeable future. You know, we'd have to get into some kind of a deep recession, which doesn't look like is going to happen, in order for rates to really, you know, take a nosedive from here and go down any significant amount. So please lock if you can. If you can't, get into a situation where you can, which means you need to have a full application package in and your loan needs to be registered. So, and your lender takes care of all that. So feel free to contact me if I can help in any way. If you have any questions regarding mortgages, loan programs, interest rates, you know, whatever, I'm happy to help. Contact me via the phone numbers I just gave you, or you know, make a comment under this video. And please like and subscribe so that, you know, the next time I do a video, you'll be able to get notified. By clicking that bell, you'll get notified that another video is out, so that you'll be able to stay on top of this information and have the timely information that you need to be able to make, you know, take action with regard to locking or floating or whatever. Obviously, if you're floating, you're not taking action. But there you have it. I hope you have a great day and a fantastic rest of your week. And watch out for the next video. Take care.